Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and I'm here with my partner, Barrie Hederachi. How you doing, Barrie?
Doing pretty good.
We're recording on Friday afternoon, the 2nd of June. We are in the final month of the first half of the year, Barrie.
Can you believe it?
It's going so fast.
Very fast.
And things are happening, which is exciting. We had a very exciting week in the markets. We're going to cover on the show today the big five with Barrie, which includes ES, bonds, gold, copper, crude oil, the dollar, and the euro. And over on the commodity side, I'm going to cover and highlight corn, soybeans, cotton, crude, and nat gas. All of those appear to be moving into a position where there's some action's going to be on them fairly soon.
Yep.
We'll start off with Bitcoin, which if you look at this chart since April, even March, not a lot of action. We're dead sideways.
Yeah.
And we were talking before the show, Barrie and I, and I was saying how, Bitcoin kind of ran up with gold and silver and the precious metals earlier this year. And the precious metals are correcting, and Barrie's going to cover gold in depth. But this thing it's correcting, but it's more of a time correction than it is price. It's fairly sideways, So the points of reference again are, the full square. The full square is at, call it 28,850, and the half square down here, which is around 24,400. Incidentally, all these levels, everything we cover plus everything we just follow, are on a Google Doc spreadsheet, which we will post when I post the link to the weekly video. Once the editing's done, I'll post a link to the spreadsheet as well. So not a lot to add here. I think it's impressive that it's holding up, but it's not so impressive you want to get involved because it's going nowhere. Anything else to add?
Well, the lower 25 looks like the support area. And let's say 25.2, 25.3. And I think long as it's above that, it's probably firm. And if you get under that, it could probably get weakened up a little bit. It'll get weaker.
Right. It definitely needs to show its hand before you or I would get involved. That's for sure.
Yeah. Where's the 22? Let's say where's 2,300 on your?
23,000 even is right about there.
23 right there. Okay. So I have support around there between that and the half, probably right in there.
Yeah, I mean that's trend line support. So yep, definitely good support there. So we'll see. We'll let it make its move, and then we'll react. Throw it over to you, and let's get into the big five because we had some big moves in risk this week.
Yep, let's do that.
Big breakout. Look at how long that's. I mean, almost a year, Barrie. Like what, 9 months if you go back to that August high.
Man, no joke, right?
Yeah, no joke.
It's really from here, yeah.
Exactly. Yeah, 10, 11 months.
I remember having that level there, 43.25 right there.
So, they're not going to get near that. Well, there you go.
Not too far, not too far.
Yeah.
So this is a big deal, I would say.
Big deal. Big deal.
Let's get into this. Last week, we left off with 41.50 being support. As long as we're above that, market's in pretty good condition. And basically, we were testing the 72-degree level. And the level there was 42.30 was the level we were watching for it to clear, which it basically did today.
Yeah.
It took a while, it took all week. I think the tip off was this Wednesday low, the 41.75 or so. And we covered that on our post on Twitter. But a lot of things came down into that Wednesday low. It looked like it was a good, some of the things did a false breaks down there. So that was kind of a tip giveaway. When you see a number of other markets or stocks you're watching do that. And we're going higher. Of course, we had the channel in place for a while. We're looking for it to push a little bit higher because the weekly was really edging little by little higher, right? We kept talking about those higher highs. And now that we cleared 42.30, got a 100-point lead, which we did most of it today.
Right.
So 43.25 to 43.70 is really the next block. And that's right here, which is for resistance. I'll draw that in. In the meantime, we have about 100-point range to play. The only thing to watch, I would say, is to make sure any pullbacks are held above 42.30.
That's critical. Yep.
Which would be our 72 degrees from the high. And long as we're in that, we're definitely in a positive realm. Fairly simple. Until we get up to this 25 to 70. 70 really is going to be starting to push a little bit, but really all depends. Mainly because the upper channel line's right in there. Coming to next week. So that channel hits about 43.50. 50,
which is right
70,
in the middle.
25, we're in there.
Yeah.
So up until 25 or so, we can probably grind a little bit, but we're definitely coming up into some overhead. And that's not a little bit of overhead. It's all of this from last year. So there's quite a bit in there. But anyway, this grind, I think, put in a lot of time, built a lot of value. So it's also very good support. So I think pullbacks are fair games at this point.
Barry, throw this into the mix too. I have monthly half square resistance 43.61.
Yeah, right in the box.
Right in the box. Yep.
That's very good. If you guys want a view of from the low, 72 we cleared a while back. We hung in there. And the only other thing is we always try to see the 90. And this, I think,
that's interesting.
Yeah, I think you brought this up this morning. I said, hey, we got a score coming up, and I think that was on the four out, right?
Yeah, that's right.
Anyway, from this low, what I consider this to be the low because a lot of the cycles expired there, and not off the one that's lower. We have a
and it was also a false break low.
And yeah, that was a false break low, but coming off the what I would call the primary low. We're up 90 degrees right there. And, sometimes in Gantt squares, you can run a little bit to the upside. So I would say that run should be from 90, usually up to about an eighth. But here we have 43.25 is what we draw up from the high. And let's just light up the eighths and see. So if you do the eighths, there it's right above 43.70. So that box is really the thing.
Man, that's a hell of a target zone. A lot in there. And Barry, look at your timing too. You're 180 days and not too many days,
Exactly. And the 180 bars come in, well, what is it, June 12th. So we're kind of burning into one of these another boxes. And we could end something there and counter trend again and check out the lower part of the channel. So the key thing to watch is now that we know this is 90 and we have all this little bit overhead from going off the high, not to confuse things, it's just to show that this 43.25 to 43.70 is a really important block. And yeah, we could trade into that block, but until really we clear that block, I'm not really on board for much longer term, especially till we get through the 180. Now we get through the 180 marker from that low and we're still hanging around above, let's say, this 43.25 and 4,300 level. All right, fine. Then I think we can probably move higher. But isn't that funny? From that low, 90 degrees is really exactly 4,300, right? Right at that 4,300 level.
It sure is.
So, yeah. So that's what we got. Anything you want to add to this?
Just that what we were talking about. Remember when we were in the congestion and we were in that lower box and we said we've spent a long time there, so the move out of here is going to be explosive. And I think you saw it today.
Exactly.
Just relentless buying. Yeah. So that's something to remember. Like when we look at some of the commodities or whenever we get a market that's going sideways for a long time, when the breakout comes, man, they don't sit around and let you get on it. You got to jump on it if you want to play.
Right. And everybody's jumping on it. That's that fear of missing out business.
Yeah. Yep.
So here we are. But we're coming up. We got a little bit more headroom. This is all sort of a buffer zone there, but we do have the 180 coming up. Well, June 9th, not the 12th, the 9th. So that's coming up. So we have to be a little bit careful in here to see what happens. We might have a little bit more upside, but it's limited till we can settle above 43. I think that's a fair assessment.
You know, it's interesting, Barry, too. Your 180s at June 9th, which is next Friday, I think, or next Saturday. No, next Friday. On the 11th, remember that Rebel Yell cycle? I just posted something about that. That's coming up on the 11th, which is a Sunday.
Well, it's right in the neighborhood.
Same day, basically, because it's, you know, it's Friday versus Sunday.
So we'll have to take that into account.
Yeah.
I mean, that could have the markets running too, couldn't it?
Yep. I mean, we could just get, you know, continue squeezing next week right into it. We'll see. We'll see what happens.
Yep. Let's take a look at the weekly. So weekly, we've been, you know, we had this up channel drawn in. And if you guys remember when we drew these boxes, this is probably last year, right? Yeah.
Those are good.
And I was looking, this is when the high came in. I was looking for a low around this secondary box, which would be right at the 50% line. And there is the actual low. I mean, this is a good time to go back and look at that, right?
Yeah, perfect.
So that was pretty good. And I had some people saying, I don't think it's based on the video, like, you know, you guys didn't get the October low. And I'm like, well, yeah, we did, you know. Go back and look at the videos.
No, I remember you calling it out in real time. You said we have to watch
and
this.
Ahead of time and in real time, because we had a bunch of cycles that expired there. We talked about how it's like a seed, you know, it sprouts and it goes higher, moves up, right?
And it didn't actually scream out of that low either. It was a grind.
Yeah. It wasn't well, they all have their flavor.
Yep.
So now getting back to where we left off. So what happened was we were at this 216 coming off the low, and we were just sitting on this line. And as soon as we started having the second week on the line, I remember saying, you know, listen, you know, if we don't settle to the upside or to the under it, it's really not decided, you know, and it's more bullish than bearish if we're just continuing to push higher and higher and higher, meaning higher highs over the previous week's bar. That it's, you know, it has a bullish flavor to it. And even a couple of times that it came under the square, you know, it rallied right back up. And after this inside week, you know, May 15th, we took out the high of that. And that was like the sort of the signal. And all through here, we went, you know, we didn't say anything bearish. If anything, we were probably cautiously bullish. And all the posts and tapes are there. So weekly looks good. I think especially if we can hold above, it's a big number, you know, 4150, let's say. So any kind of a panic sell-off and we are holding above 4150 sets up a stronger market in the long run. So that's that. Anything else you want to add to the weekly?
No, just how perfect it is that we were dancing around the 216 for weeks and weeks and weeks. And now, and just waiting for it to make its move. And there's your move, finally.
Well, it's a matter of how they get, you know, how the markets usually get people in the wrong footing, right? Even here, looks like a false break, which it definitely looked like,
right?
And then a hard down and a reverse.
Yep.
Not to say that this couldn't be, but you know, we have to play by the rules. And the rule is we took out the square, we're watching, and now we're moving higher. And now you guys know where the upside buffer is and the two support levels we're watching. And if you guys like our work, it's a good time to remind you to hit the likes and share and maybe subscribe to help the channel grow. It'd be something nice you guys can do for us. And if you have any comments about what we're talking about, if you have different levels or anything, just feel free to leave them in the commentary section. And moving on to bonds, we have, I should probably zoom in a little bit. We drew this little Gartley last week to sort of mark the downside of this leg. But we were looking for some kind of a counter trend because, you know, we had a number of days down and we got the counter trend and it's exactly where it should be. It's the bottom of the box and exactly at the quarter of the level, this dotted line. So.
And your equilibrium line caught it.
And the equilibrium line caught it. Yeah. Remember, we played the two of them and we left it. Said, it's about the same. So,
right. No, it's really nice.
So this is so that's that. I'm expecting it to stay under 130 going into next week. We'll see how that works out. I don't think we have put in a low yet. I think this low is going to be checked at some point. But in the meantime, you know, if you just take the broader view, you can see how we're just consolidating in this big box here.
Mm-hmm.
Just to draw it out, I'll delete this. Really is the consolidation, right? So it's possible that we hang in here for a while. So we have to watch when it takes out the low of that zone, and really the upper side to be 134, 135 up in, we get up through here.
Mm-hmm.
Now that is where we bounced off on this rally from last February, which was really where we were looking for. It was, up on these, we had all these lows to push that down, and we got the push. So I'm looking at this as a downtrend with a counter trend. So this would be a counter trend, and expecting it to go lower unless it takes out the high on Wednesday.
Mm-hmm.
Right? That would be a marker saying, okay, it's not done. It's probably going to meander a little bit longer. Looking at the weekly, we had this expanding triangle drawn out, and we went to the upper side of that and started to come lower. And even here, you can see in the weekly very clearly, we do have a, line right there.
Mm-hmm.
Right? That really is the resistance. So 129.10, let's say, is the level to really watch and to settle above. I mean, that would be like an early warning, like a yellow flag if it gets on top of that. But as long as we're below that, I think this lower boundary might be the target. That's all I have for bonds. You want to add anything, or?
No, I think you got it. Price action pretty well now nailed.
Yeah. Of course, we have a trend line here. So you guys, I don't want to draw a bunch of lines and
right
muck up the chart, but this is, you can eyeball that. So we're right there. We have a trend line from up here.
Mm-hmm.
That's kind of where we are. Not exactly running at this point. It's probably going to consolidate, but it's weak, at least below this line for now.
Mm-hmm.
Especially because it's weekly. You can see, we had a couple of months above that. A lot of action, but not a lot of movement, right? But
mm-hmm.
Anyway, we took out the trend line. Looks like, we've been waiting for a higher
pullback.
Low.
Yep.
Yeah. We had a false break here, we thought. So far, it's been okay. And we moved higher. We wanted to see if it can hold above 73.50. We haven't done that yet. And we had another pullback, which cleared out the people watching this low, but it didn't quite get low enough to take out that low.
Yep.
Now we're moving higher again. So let's see if we can take out 73.50 this time. Or if you're going to make a new zone up here and kind of consolidate down in here for a while.
Mm-hmm.
Just flip that around. So that would be sort of the zone. If we can't clear 73.50. Long term, I think, well, we call these lows out, the March low, May low. So these are all lows, and price, lows have held. So we have to say those lows we called out and they're okay. We just haven't had a big rally because we haven't really cleared the sort of the starting point. We haven't cleared the gate. And that's 73.50. And this is the overhead that we have above that. So once we clear that, it's good to go, because that's a lot to get through. Anything you want to add? We're good.
I'm going to mention a couple things and show the weekly again on crude, because I think it's looking ready.
Speaking of the weekly, not much. We have we had that big down week, and then we had 4 weeks inside, which is so it's a long time. And we really, weekly wise, we really need to get over this 50% of the square, which is right around 74. We have 73.50 on the daily. So somehow we can push over that 50-point range, 50-cent range, and settle above that. I think that would get us started for the next run. Until we do that, it could easily spend a little bit more time in this box down here. Moving on to gold, 1940 held. We had a nice push up from there. We did clear the 90, but really couldn't hold, and it came back down under 49. 1965 is the price close here. So I'm guessing we're probably going to be range bound between 1940 and 1980. That's what it seems like. Unless we take out 1940, we don't have a whole lot of trending going on. Or we settle above the 90-degree square, which would be 1980. So settling above 1980 for upside, and taking out 1940 to the downside. Anything you want to add there?
Yeah, it just looks like it's having trouble. All I'm trying to figure out now is like how big and what kind of correction are we getting, right? Is it going to be a big down, or are we just going to dance around this 90 and go sideways? That's the question that's still outstanding.
Mm-hmm. Right.
But we'll see.
So moving on to weekly gold.
Just at the bottom of that channel.
Squeezing a little bit. Yeah, we tapped the channel twice, and we tapped the 2000 level basis, the weekly chart, once. Not much to say. Like I said, long as we're below those levels, 1980, I think we on the daily level is really around 2000 on the weekly.
Mm-hmm.
And so if the trend line goes, we can call it we're done here for a while. That would be the early canary.
Yep.
On this chart. Of course, then we have this 1881 to 1919 level being the big buffer, big holding zone. We'll see. But
yeah, that weekly resistance at 2000 is really important.
Yeah, that's really important. If we can flip this and take out, get above this week's high, then I think we'll be in good shape. Otherwise, especially next week, we take out this week's low. What we do have in place is a 1 and a 1 bar counter trend, and that downside could be fierce. So we got to watch that. And that's why, I give out these levels so you know what to do. Mm-hmm. But at least, with the sort of a high for this leg come in, and we have a 1 bar counter trend, we take out this week's low. Really, we got to watch it because the downside could open up. It's just a normal pattern. So
agreed.
Eye out for that. And if we somehow get above 2000, okay, great. Save for now. And we could probably find a little bit more probing to the upside. That's really important to watch on these charts, especially on a weekly basis, right? When we talk about taking out the low, we're talking about the weekly low, right? And that would be right there. And 1940 would do just as fine, just as well. So that would be the block to watch. Moving on to copper. So last week, copper's
trying, isn't it?
It's trying.
Yeah.
It's about as good as it can do with not a lot going on,
Right.
Well, we had the low at 354, which we had called out before. Mm-hmm. And the resistance now was at 383, 384. So we're in between. And so I think if everything's well, we should go test 383, 384 area. Mm-hmm. Because the low seems good and it came in on time. 225, low to low, not bad. Looking at the weekly copper, we came down to test the 1/8 and also the lower boundary of the fork. And we talked about this weekly high getting taken out, which it did this week, took out last week's high. So this is generally bullish. And if you guys want to really watch it, we want to be above the weekly close from last week, which is 368 or so. Well, let's get the accurate number here. 364.40. So above there, we're okay. It'll push higher. I mean, it would be nice. I would expect normally we should at least go up to, 399 and test that area. That would be the main resistance level. We'll see if it can do that. Next, we have the dollar. We ran up. We were looking for some kind of a quick counter trend, and we got the counter trend. And we have a trend line that is holding pretty well. Didn't even get close to that. Mm-hmm. So I think really to the upside, these lows came in pretty well. We have this 102.75 area is pretty good support. Otherwise, if all is well, 105, 106, we're expecting this high to be tested at some point. And so it looks good. And we've been bullish the dollar this entire time, and nothing's really changed. You guys watch this every week.
It kind of fits with the weakness in gold too. So makes sense.
Yeah. I mean, especially I think gold, we got to really watch, especially if dollar takes out the 72 coming, 105.
Right.
75. If we take it out, settling above, that'd be like gold taking out some of those other key levels.
Agreed.
So definitely something to watch. Here's the weekly dollar. What can I say? Other than 50% really is the next point, which is 106 and some change. The big deal here is not trend lines or anything. It's really the fact that we were able to hold the 90 level coming off the lows. Mm-hmm. And that was around 100 and a half. And we did that. The fact that we did it was really the bullish sign we were kind of hanging on to. So now we can get a halfway decent trend line going. And it looks good. I don't have any problem with what the dollar's doing. Maybe we can draw this trend line here and we can see we're starting to break out of that. So we're all good. Not much to say, at least up until we get into the 106 level, we challenge this high. Then we can see if we're going to consolidate a little bit at that point. We're going to break through and get on top of that. Dollar's going to be exciting in the coming months and years. So it's definitely something to not ignore.
No.
And finally, the euro, we saw this downtrend last week and we called out, we were expecting some kind of a counter trend this week. So after Wednesday, we got that. And 108 would be, normal resistance. So we're, still acting a little weak. If you notice, it's acting a lot weaker than the dollar, as far as the geometry goes. So let's see. I think the key for the downside would be if the euro takes out this 106 level. I think 106 gets taken out, this 50% mark. Then I think it'll sort of seal the fate, for a longer downtrend move.
Yeah.
But for now, it hasn't. Pardon me?
I was going to say a lot of people will jump on that for a sell.
Yeah, but for now, as long as we're above this 106 level, the 50% of the square, we have to be cool with all that and give it the time it needs to burn out. So here's the weekly. Always gives a better perspective. Less noise.
Yeah.
So we had this blue line, which is 110, which held the move, the counter trend, because we're calling this the different major trend down, counter trend. So if it hits, we were down 1, 2, 3, 4, 5 weeks. Yeah, we could have a little bit of a counter trend. Maybe 1 or 2 weeks would be more than fair. So we'll see how it goes. But for now, it's weak, so you can take the sell signals. We haven't really had any support, so we remain on the short side, but with the eye out for a counter trend because we haven't had one other than this 2 bars on the daily. We haven't really had a weekly. Not that we have to have a weekly, but as long as we're under 108, it's definitely very weak. Okay. I think that's all I have. What else can I cover? The 30-minute. So we talked about this. I'm posting this 30-minute updates of this chart every day.
That's a good one.
On Twitter. Yeah, thanks. And so I showed you guys last week. So this week we had the highs and we changed the square, which we talked about on Twitter on the first post. But anyway, you can look at the darker lines to be the major points and the dashed lines to be the minor levels. And you can see the highs came in right off the weekend, right at resistance. We came back down to the center, failed here, went back to check the 60, which was where the old high came in, and bounced off that resistance in that block, came back down to the 60, higher low, rallied right up into the next level. I mean, just from box, kind of like your ping pong, right?
Absolutely.
From level to level.
Yeah, it's a beautiful level to level thing.
And then we, if you notice, we didn't really sell off. We kind of hung in there, sort of grinding into the level again, got through it. And the key place to jump in would have been this pullback right onto that 120 level, which was right around 32.38. And then the next level was a 50% minor something, 42.68 level. And we had a little bit of a skirmish for a few minutes there. And eventually we did go and tap the 180, there it is.
Yeah, perfect.
Very good. So
it's a great little day trading template right there.
Oh yeah, man. I mean, once you have these levels, right? What else do you need?
Yeah.
A way to get in.
Yep, that's right.
So it helps. So if you guys are trading short term, this might be of use. Other than that, that's all I have. Here's the daily. I think we covered everything pretty well.
Yeah, absolutely.
Back to you, and let's see what the commodities have.
Sounds great. Good review, Barrie.
Thanks, Ben. All right, Ben, there you go. We got the breakout.
Up and away.
Quick little pullback to panic everyone.
Oh, nicely. A couple of them, right?
Yep.
And that's what we've been talking about on this NQs for months. I mean, the NQs have been leading the market They've been much stronger than the ES and the S&P 500, except for today, which is very interesting. Is the baton getting handed off? We'll see. One day doesn't a trend make, but it's something to watch. So, here we saw basically this is textbook level to level trading, right?
Yep.
In the last month or two, this is where we were chopping, much like Barrie showed on the weekly ES. We were chopping around this full square for a while. We dipped below it, and then we did one of these moves, and then it's been gone, right? And along the way, you get these shakeouts like this on the 24th, which was a Rebel Yell cycle date, by the way. Nice cycle date. And then yesterday and Wednesday, quick little pullbacks, and then we go again. We made a new high. So instead of predicting or guessing, you watch the levels, right? Watching the levels this whole time would have had you on the right side of the market. So for now, on the bottom, we're looking at, call it 14,300. If we get below that, that would signal, and when I say get below, not like this, but actually get stuck under it. Like on the way down, you can see what's getting stuck under means, like this.
Right.
So we get stuck under this, then that signals trouble. Otherwise, your new target is up here, the half square. And that's just under 15,000, 14,955, which incidentally coincides with monthly resistance that's around 14,900. So I think we could put say 14,900 to 15,000 right in here there's going to be some resistance. And are we getting long in the tooth? Yeah. Is it really accelerating momentum wise? Yeah. Is that sustainable? No. But we just have to wait until it breaks. You cannot predict, because I think on the way up, Barrie, you were showing how steep things were, and they just kept going and kept going and kept going, and they'll do that, and you can't fight that. Wait for the break, and then hit it on a counter trend. But right now, it's bullish, and until we lose these levels, it continues to be bullish. I'd say if you want to look at it like a sort of a drop dead place, right here would be it. Around this 13,700. If we lose that and get stuck under it, it would be pretty significant. Because remember, that was this high coming into the low. For now, it's full steam ahead. Anything else you want to point out on this one?
Well, on that one, pretty much where your quarter of the square comes, which is right about there. I have a 60-degree square coming off the low in November. We basically had three lows, right? We had the spike in
October,
right?
A November
low, and we have
December, January. Yep.
Yeah. So if you take the middle one, which would be the November low, what happens is this high today is, this is on square of 60. It's 60 degrees up exactly, and it's a 150 degrees, so it's 2.5 squares out.
Yep.
Now, it's a square, no question about it. And so what does it mean? Well, I would say, going back to the squares, if we can hold above, let's say 14.5 or so, I think we can continue the run. But 14.5, really, I mean, we're what, 80 points above that. So
yeah, it's tight.
So that's the area to watch. I think like 14.20, like let's say 14.3 to 14.5 is like the buffer, right? Yeah.
Oh, yeah, right here.
Yeah, right there.
14,350 is my.
So we can just say, long as it's above that square, you got.
Yeah, exactly.
That to say that, yeah.
And it may be, if the baton's getting handed off to the cyclicals and the sort of more blue chip type companies,
Right.
Maybe these go sideways. Maybe we don't accelerate up, but we go sideways and burn off time while they hand the baton off to the, to the industrials and those type of companies. We'll see. Again, level to level, no problems.
But like we've been calling since October, since and especially after the second low came in, we pointed out the higher lows, so we are trending up, and we're decisively taking out levels. Look at your 76-degree level. I mean, you chopped around there for a month, right?
Yeah, that was a long one,
and eventually broke out. So now we're at the next level. I mean, you kind of cleared it, but on my charts, it's really right here, 14.5. So we'll see what pans out.
Yeah, we'll see.
It's kind of like the S&P. We're at like very close to key levels, so we got to be a little bit cautious because we ran up there so fast, right?
Yeah.
So we're not at a beginning of something. Like this is not a beginning of something. Like today's close. It's closer to an end of something.
I'd agree with that.
Just to show the other side,
Yeah. And maybe, like I said, doesn't mean we crash from here.
No, it could be a consolidation, some kind of a counter trend. Yeah.
Yeah, just counter trend. We'll watch it and we'll see, and we'll react based upon the price action, like we always do. On the commodity side, we've got a couple grains to cover. We got cotton, which continues to coil, and I do think energy is going to be something that is the second half is going to be a place to be.
For sure, yeah.
Because the charts are starting to whisper on those. Let's start off with the grains.
All right.
Corn, we talked about last week. We called out this low, this false break low and reversal, and then we had this nice move up after that structure came in. Then we had a sharp pullback, and then look at these last 2 days, man. Look at this bar today. They were trying to sell it off again, and look where we closed, right near the highs and above, all these previous, 4-day highs. This thing looks good. It looks ready to go. It is leading the grains out. It set its false break low. It's made its initial move up, and we have the first significant pullback. And this was a real test, today, I think, because we went up. We made a low on Wednesday and closed at the high. Like it was one of those days where they sold it from the open and then reversed it and closed on the high. The next day we took out the high, but it closed on near the lows. And then today they were pressing those lows again, but it was another higher low. And look at the reversal, closed right on the high. Right near the high. So this is being bought for some reason. I don't know if it's El Nino, La Nina, what the reason is, but for some reason, this year-long selling we've seen, I think, ended here, and now it's a better buy. The first resistance is clearly going to be this full square. How we handle that. What I'd like to see for those of us who are bullishly positioned is you want to see a push through and then a pullback that stays on top of it and just capture that level back again. But it looks good to me, Barry. I like the fact that today's close, which is here, is above this entire structure here. All that price action is below where we closed today. So I think corn is furthest along. It looks the best. What say you about corn?
Well, we're definitely scraping the lower side of the boundaries, the zone here, especially if you go off the July low last year, right there. So we did a false break below that. And so from that July low to this low, it was 216 bars. So low to low 216. And what's interesting is that low to high in October high in corn was 72 up. So it was almost 72 by 72 to going up. And from that high coming down, we're 144. So, it's possible that we have a decent low in place. I'm just backing up your story, right?
Yeah.
We're not in a roaring bull market yet. And on my side, to really get above that, to get going, we'd have to, at least for now, next week, hold above 600, basically. If we can do that, where's your 600? All right.
600 is right there.
Yeah. So if we can hold above that, I mean, generally we need to be on balance, need to be on the flip side of that. Then I think we can have a little bit grind higher because we do have some overhead around 630. Looks like that's your square also.
Full square. Yep. Oh, that's around 615, 610,
Okay.
615. Yeah.
Okay, a
616.
little above that. So anyway, that's it. So it's definitely time to keep an eye on it, mainly because it did have a couple of squares and time cycles.
And let me show you this too. This is a monthly.
Well, there you go.
See that?
See, you're holding back the good stuff. It's like, yeah, look at that. I mean, look at the low in 2020, right?
Right. So this, when you're looking at trying to nail these lows, it's not just the daily that you look at. You go to the higher time frames and see, do you have something significant there? Because remember, this is a whole different square, different setting and everything than the daily. But look at where we look at what the low came in last month.
Right.
We've already made a higher high this month, which is again another good sign on a longer term scale. So let's see. I mean, could it be doing something like this? Could it be repeating 2011? Made a high, pulled back a full square, and then we took out the highs.
No, man, based on the huge cycles yearly, we're going to the moon here, but it's just a matter of where's the landing pad. Take off,
I agree. I mean, I think the first move is we take these out here.
Hey, it would have to, but I think we have at least 2 squares to go to the upside. So which just puts us up almost into 2028 in time. And well, it's just how long it would take to get that thing kicked into gear.
Right. So this is something else to keep in mind for corn.
That low, especially.
Yep.
And we took out last month's high, didn't we?
Yes, we did already.
Yeah, that's important.
It is. So corn looks good. It's the leader of the grains right now. Let's go to second place. It's earlier in the process, but you can see the similar pattern, right? Same sort of fast down, then this meandering sideways, and then a plunge that took out the previous low, and a quick reversal. But see, we're so early in beans, we've only had like the reversal. We haven't had the reversal and the pullback like we saw in corn. So what I wanted to alert everybody to is this is the pattern, right? It's the same sort of structure that we saw in corn, which is leading. So do we get another up day or two? Maybe a little follow through. Then we want to watch that first pullback on a daily basis, right? If it gives us that higher low, if it stays above this half square, all bullish, all good. And something that we can get excited about. Now, how do we know this is a decent low? What's the evidence that we have? Let's take a look at the weekly. And we're working on well, it's not quite an outside. Yeah, I think it might be an outside reversal. I don't know if this is inside or not yet, but this again is a weekly full square low, right? So the correction has gone from the top of the square down to the bottom of the square. We have some similar evidence on a monthly, on a half square basis. So weekly, monthly basis, we have some support for that low being a good low. On the daily, we've got the false break and then the quick reversal right back above the half square. So now here we're watching to see where does this first leg go, this first thrust, and then the next pullback gives us the opportunity to potentially catch that fast move coming up on the third. Anything you like here about beans?
I like the low. On my chart is 120 degrees down from the June high. So that's a big deal. And we hit that first in last July. So that was 120. That last July is exactly a little bit below. That's my 120.
Right here.
So here's our classic false break.
Yep.
and now we watch, wait for
Now
those pullbacks.
wait for that first pullback, right? This is a good start, right? We have the false break, a reversal, and we've got two strong up days.
Right.
It's what you want to see at a low. Now we just see let's let it play out, and then and get involved when it gives us that more evidence of a higher low on the first pullback.
Mm-hmm.
Let's take a look at cotton. This is one we've been tracking for a while, and we are oh so close here. So Barry and I have been talking about this for months. I've been talking about it on the show for weeks, because much like the S&P, where we had that long, torturous consolidation for what did we have? 2 months, 6
Yep.
weeks, 8 weeks?
Mm-hmm.
How about 6 months?
Yeah.
How about 7 months? How about a lot of energies built up in this right now? And look what's been happening since March, since this March low. We're getting a series of higher lows. Right? It's not breaking out yet, right? It's getting rejected, but every time, 4 times since that March low, buyers have stepped in at a higher price. Close the week near the highs. Let's see if we can break through this, break out of this channel, and then get above this full square and sit on top of it. We're in business with a lot of energy built up over 7 months of a consolidation.
Right.
Somebody is thinking something here because this type of price action.
Mm-hmm.
And as whatever that news is filters out into the market, people are going to be willing to pay more, and they're going to push this price up. Just waiting and being patient, waiting for the moment when we actually do get, that sort of evidence that it's broken out. Couple things to look at on the higher time frames. This is a weekly,
Mm-hmm.
where we broke out of the channel, and now we're the triangle, and now we're sitting on top of it.
Right.
See where the low here this week was, right on top of the triangle.
Mm-hmm.
So this is a bigger picture thing, and this thing does triangles everywhere. If you look at history of this thing, triangles everywhere. And then there's the monthly. I left this triangle on from before, where we had this massive move, and we are right at the top of the triangle here. So if we break out on the daily and break out of that channel, we're going to break out the monthly, and the weekly's already broken out.
Mm-hmm.
So higher time frames are supporting here. I think it's building up for a massive move higher. When? Well, when we break out here. So this one is clearly on my radar and being watched every day diligently, because I think it's coming. Anything you have to add on cotton?
Well, just that I have really good support. Well, I have a kind of a box around cotton. The lower boundary would be 77.50, let's say.
Right in here.
Mm-hmm.
Yep.
And the upper boundary is 88.75.
Right there.
Mm-hmm. And that 88.75 is 270 degrees from the high.
Mm-hmm.
In May of 22, of course. And so we've been, this whole consolidation has been between that, under that 270, but above the next, the 50% line.
Right.
And when you frame it like that, well, you can see it on your chart too. You can see like we were going sideways, nobody knows which way, but now we're slowly starting to make the higher lows, and momentum starting to build up a little bit. So yeah, I think it looks good, and I think to really start playing, I would like to have it close above that 88 number, and
Right.
and hold above the zone. But for now, yeah, it's looking like it could break. But like you say, when cotton breaks, it really breaks. So
it moves fast when it goes. So
mm-hmm.
Keep an eye on cotton. That's the word. All right, let's jump over to the energy, the two energy stocks, crude and nat gas, because I think both of those are setting up for some interesting moves. Let's start with crude.
Mm-hmm.
Barrie covered crude, so I won't spend a lot of time on this. I'll just show you the weekly. But here, the key thing that for me is we called out this low. It's holding so far. It's been dancing around this half square. It looked like it was going to hold it, push down for a day, and then boom, right back above it. This move out and we break this short downtrend line, if we get, continued strength next week, this thing could fly. And here's why. On the weekly, we've been trapped by this downward sloping arc on the circle here.
Mm-hmm.
Even this week, it couldn't quite escape, right? It pushed down and was trying to get back under here, but it couldn't hold it. And we closed outside the circle. So next week's bar is going to print here. Right. Once we get a full bar outside of the circle that sits on top, it can be a launch pad to the top of the circle, which is ironically would be, up to your magic go number, which is, in that 83 to 85 range.
Right.
So this is the next move I think we're going to see in crude is a move into that lower 80s resistance level, which we get through that, then it's a whole brand new ball game. Then we can say with high confidence that this low is good, right? We've got a good low. Now let's find a spot on a pullback and just trade this thing to the long side.
Right.
Right now we're probing. Right now we're trying to get in without a lot of risk because the odds aren't hugely in our favor. They're positive, but not hugely in our favor. But as each of these things, like Barry's number, I think was like 73.50 was he wanted to close over that to give him more confidence, right? Mm-hmm. And that's going to be like right in here. So next week's bar is out here and we aren't touching this circle anymore. That's when we can get that, that sort of escape velocity out of the circle. And you see moves like that or something like this, right? Circle to circle.
Right.
So we'll see. But I do like the way crude is looking. I like the way it acted this week. This was let's go to the daily so we can see the day where, it could have been lights out here, right? It was looking like they were going to gun it right down to the lows. And the next day, boom, took that bar right out, took the high out. So this looks like, I don't know what's going to happen. I don't know if it's OPEC. I don't know what, if it's geopolitical garbage or what, but something seems to be brewing that's going to affect the crude market. And it looks bullish for crude. Mm-hmm. Let's jump over to nat gas. I know you already talked about crude, so let's just jump into nat gas. Okay, why do we want to look at nat gas today?
It's on the trend line.
it's on the trend line. Pretty boring, so far. But look at this. It's making potentially another higher low. Mm-hmm. Like all we got to do, if we take out, Friday's bar, what's the high of Friday's bar? 223. So essentially the half square. We get back above that half square and we've potentially got another higher low in, which is again a positive sign. I went back and I looked at the previous lows that nat gas has made, like how long did it spend around the lows, sort of bouncing around and, messing around. Mm-hmm. The average was about 4 to 6 months. Mm-hmm. Right now we're in the 5th month.
Right.
If you look at the, this first low coming in here in February.
Right.
So is it unrealistic to expect in the next month or so we get this strong move out of here? I don't think so. I think that's what this, this test of this trend line and this square up here at 4 is going to be sometime in the next 30, 60 days. Mm-hmm. If this current structure is similar to past structures, like in here, not in here, it was back actually in 2000. I was looking at major lows like 2011. And then I think it was 16 was another one where it did that. So I'm still very, very positive on nat gas. Like to see it put in another higher low here, which would, again, be another evidence of the buyers stepping in prior to, achieving the previous lows, like a lot like we saw in cotton. And I just think if you're patient here and you can play this thing right, we're going to get in at a good value position, which is being established by this sort of sideways movement we've seen since that February low. Anything else to add here on nat gas, Barrie?
Well, if you take it from the high, in August, I have a square of 90 sitting up there, and 270 degrees would be around 150. Okay, which is
Right about
it's
here.
No, your main square. Where's that? Where's the big red one? The full square. Yeah.
This one is around 164.
Okay. So it's between that and your 1/8 line. So the 270 down is there. Now we did cross 180 bars from the high early part of May. So that little low early May could have been the 180. And we had like a quarter of a square. So we're kind of okay there, or an eighth of a square. So my take is we need to sort of like get going, right? We had the trend line, we came and tapped it, and that's great. Now we need to really get moving. If we don't, I'm afraid if we break the trend line, then I think we're going to get down to the 150 level. And
I think that's a fair assessment. Yep.
And if it breaks the trend line, and the reason I say that is that 150, when I say 150, it's really like 50 to 60, right? Let's just say, take that.
Right. Yep.
And the reason is in, what is it? Let's see here. So right around July 7th, that's going to be 315 degrees of solar movement from the high of August. Okay. So that coupled with the 270 price, if we hit that, that's fairly powerful, I would say. And July 4th, it's 225 bars from that high. So I got two time counts coming into that early July timeframe.
And that's perfect. It's perfect because remember, we're in the 5th month of this messing around at the low.
Yeah, that would put us into the 6th month. Yeah.
Put us into the 6th month. We're right into that 4 to 6 month time frame at lows before the big move out of the bottom.
So that's potentially kind of where we are if we take out the trend line. But if we hold the trend line and we can get above, let's say, 2.5 or so, I think we're good to try for the highs again. Maybe go try for the March highs,
right?
At least. And if we can get through March highs and settle above that your 38 degree line there, I think we're in good shape.
Yeah. It's one that definitely requires patience, and you have to manage your risk, but there's a lot of reward when you get this one right. A lot. So where's your focus this week? Where's your focus this week, Barrie? I know I'm going to be watching the grains very closely. I didn't review wheat because it just made a low this week and is reversing, but it's in the same pattern as corn, in the same pattern as soybeans. It's just behind the other two. But I'm going to be watching the grains. I'm going to be watching the energy, and I'm going to be watching cotton. I think commodity wise, those are the three that are really at the top of my list this week. How about you? What are you going to be watching?
Well, the S&P and crude for sure. That's the main thing. Dollar is kind of okay. We kind of know what's happening there. Copper, we kind of know what's happening. Gold, we're okay. It's really the S&P that, kind of broke out, made new ground. So it's kind of a big deal. I want to see if this is for real. And we're going to go up and test the 43.25, that level the buffer that we set up, and move higher, or like we saw, or if this is going to be some kind of a false move, false breakout, not a false false breakout in terms of taking out another high, but false breakout from the 72 degree square that I was using
Right.
on my chart, right? So I'll be watching that. But generally, I would say, above that 42, 25, 30 area, I'm bullish, so that's okay. And the other one would be the dollar, just to make sure. And crude is the other thing, because I'm watching a lot of energy stocks, service, XES, and all of this. So they're really starting to move a lot, move more than usual. And you can see the crude really worked it out this week. So if we can get above that 73.50, which is sort of the magic number for me, then I think we could have some fast moves, at least worthwhile moves to trade, right?
Agreed.
Yeah.
One of the
key ones.
One of the interesting things you said that we should discuss, this move up in equities, and I got the scars on my back to talk about it. There's been all this consternation about, oh, this is AI bubble, or it's just a few stocks, or there's all kinds of excuses of why this rally is no good.
Mm-hmm.
And I've been hearing them, and I you can just sort of see it in sentiment, and in the past, and again, the scars I have on my back is either selling too soon or trying to short into that.
Mm-hmm.
In the past, when those things happen, it's almost like the fuel on the fire to keep pushing this thing up.
Right.
Can you comment on that? Because I know you've been through some of these storms as well.
You mean like the wall of fear kind of thing?
Yeah, it's not only fear, it's like the more of like the people that are missing out start bad mouthing it, or the people that are short tell you all the reasons why it can't go up.
Listen, the sentiment and public sentiment is just a madhouse. So I don't even really follow any of that because of that reason, because, it's just, to me, I see all of that like waves in the ocean. They come and go, but they're always a little bit late, right? That's why we can be contrarian and do well. So, well, you have to lean on your technicals no matter what they're saying. And next week is just to bring one thing. Well, a couple of things. One is I was checking some AI stocks, and they look like they're coming close to the end of a run. Mm-hmm. I have to say,
right,
because most of them were gapping into this, and that's a sure sign, right?
Right.
Especially given this period, and I haven't done a lot of work on all of them, but I do have a few of them, and with these big gaps.
Do you want me to send you the screen? Do you got a couple you could throw up? Or do you have it on that computer?
No, it's on another computer actually, because I use a different platform for that, just because I'm not doing heavy analysis on those.
Right.
Unless I have to. On that day, I just do a lot because they're not trading. They're more like, storing stuff in there, right? So
sure.
But basically, you guys can pull up any AI related stock, and you can see the big gaps that came up, and these look like exhaustion gaps. Not gaps at the beginning of a move. These are gaps that are coming towards the end of a move.
Right.
And so I'm guessing what we're going to go into is this whole fourth wave price action, where all these new people are going to come in and do all this stuff and get completely churned.
Right. Right.
You heard it here first. You watch this now.
Right.
And so that's if we get the fourth wave type of price action, right?
Mm-hmm. It's interesting. It's really interesting because the times that this has happened in the past, I remember saying, it doesn't make any sense to me. It doesn't make any sense to me. Mm-hmm. And then I forget who it was. It was either Druckenmiller or Soros or one of those types of guys who said, whenever he sees a move in the market and it doesn't make sense to him, he buys it. Mm-hmm. Because by the time it makes sense to him, it will have moved so much more, right?
Yeah.
And that's when it's too late.
Man, Ben, this is timely. You're talking about this. A friend called me just before we did the show.
Right.
And the whole thing was, oh man, I missed the glowing oil crude, not crude, but these energy stocks and service sector,
Right.
And I reminded him, we're pretty good friends. So a couple of weeks, not a couple of weeks ago. Yeah, a couple of weeks ago, I said, listen, you're doing this. Now, do you have a strategy for this? He said, yeah, I do. And I said, oh, what is it? And he said, well, what I do is I want to make sure the low come in. I don't want to buy the low, but I want to make sure it comes in. I want to see a rally and then some kind of a pullback. And then I want to buy it. I said,
Right.
okay, well, at least it's a strategy. So today I get a call and he's all flustered. He's like, oh my God, I missed it all. It's over. And I said, well, but it's perfectly working according to your strategy, which was to let the low come in, let it move away and have a pullback come in, which is just fine. But the guy is completely flustered because it moved so fast. He didn't expect things to move that quickly. Right.
Right. Right.
And, so the point of that is you better have your levels and your strategy in place before everything starts to move. Kind of like the story you said, sentiment could be whatever, but if you don't have your prices trap set, then you're not going to be in good shape to take action when things are just moving and all the flood of emotions take over. Sentiment, people are listening to news, reading this and that. You just can't. Right?
No, you're absolutely right. You and I have talked about that multiple times, where you have to have your plan before the bullets start flying. Because when the bullets start flying, you're not going to be able to think.
99%.
You have to just react.
Yeah.
You can't say, okay, where's this retracement? Where's that? Where do I want to buy it? How many shares am I going to buy? You got to have a plan.
Right. I mean, it's no joke. If you're really doing this, you have to do that. It's not even a consideration. Like if you don't do it, then it's just, you'll pay a price. Actually, I'll take the screen. I want to show you something. I pulled it up on TradingView.
Okay.
Can you see that, Ben?
Yeah. Yeah.
Okay. So basically, if you take Nvidia, for example, and we go back to what I was talking about, is something trending or not?
Yeah.
And we talked about, easy way to figure it out would be to draw just a couple of lines to trap the
high and the low,
the last swing. And here we can take this. And basically, I'm just saying, looking at just the price, that this is where the churning, where you talked about all the people that didn't want to miss out are going to get in here somewhere.
Right.
And this is where it's going to churn and take all the money away.
Right.
And we'll see how that pans out. This is just my take. But on the other, I told you I was looking at it on another screen, but I can't bring in here. But if you take the October low, and just like we talked about for the S&P, this, early July comes out to be. So I was saying I was looking at it on another platform, and just to say, just like in the S&P, if we take it below from the October, we're coming right up on the 180-day timer marker next week, right? Yeah.
Yeah. Yeah. And the next
9th
week
to 12th, right in there. And with Nvidia running up like this, my take is that we're pretty close, and it looks like we had a sort of a 45-day blow off. If you go 45 days back from this high, you can see the move come in with a gap. So I feel like this is more of a high than a place to get in. And the point of showing this is, if you really don't know anything, you can just draw the lines and to see if we're going to go higher or not. And most likely this is not the place to buy, especially since you had all this room, and when it's gapping and exhausting into a high that's 180 days from the low, it's not the place to get in. So that's just danger altogether, right?
Absolutely.
And anyway, the point to say that use something technical to confirm whatever you're doing, and have your, like you said, have your levels before, and stocks or whatever picked out, lines drawn before the madness starts. And then, when it's chaos, you can just keep your mind clear and get the job done.
That's excellent. That is really, really good example right there.
Mm-hmm.
So we know we got a busy week coming up. Let's all have a good weekend. Everybody relax, watch the video, like, share, do all those things for us. We appreciate that. And we'll talk with you next week. Have a great week, Barrie.
Thanks, Ben. You do the same. Good job. Let's see what the commodities do next week. A lot of them are hanging by the nails here, critical levels. So,
and I think this week we saw some money coming in there, and that's
exactly.
It's encouraging, because I think that a lot of them we've had a year plus corrections, so we're coming on, 360 timings, 520s, there's a lot of good timings that are coming out now in terms of time spent either correcting or going sideways. So the moves will be coming.
Right. Very good.
All right. Take care, everybody.
Thanks. Have a good week, everybody. Bye-bye.
Bye.